right, guys, how we doing? Sam here with you. We're going to take a look by request from the members here at the euro to the CAD. All right, so as many of you know, the majority of my trading is in foreign exchange, so I'm always glad to see members expressing an interest in looking at Forex. Now, as you will also always hear me say, when you're looking at Forex, you have to go to the daily. Have to go to the daily to know where you are, assuming you're going to try and attempt to put an Elliott count on it. So in doing that, it can take you going to the daily to get an idea of where you actually are. So I'm all the way back to the 09 pivot high up here. And I do get it's, again, kind of hard to miss it. I get a very clear impulse coming down. Now, it is technical. So here's where you'd expect the 4. Now, we don't make the target. All right, so we'll remind you as well. Just because the target is there doesn't mean we make it. But it was a pretty nice move here for that. So you might have been looking other things you could have done there just to try and help identify that swing. So length of the 1 projected from the 4. Kind of in between. So you didn't get a great, likely there would have been some divergence. Well, we'll get to that in a second. Likely been some divergence down there, but you don't have a perfectly technical pivot here, at least at this degree. Now, it might be on a smaller degree. You could find it looks like you went from here, looks like you went 1, 2, 3, 4, 5. So it's likely it's in there somewhere. You're just going to have to dig for it here. Let's see if I can find it. Well, that could be it right there. So they're the front run on the 50. They get to the second target. No little pause here, but they get all the way to second target. That could be it. Hard to say. So, but we certainly get one heck of a reaction. So with the impulse established down here, 5 down, we're looking for an ABC. Well, you certainly get a nice, pretty solid A wave coming off of that. So swing low to swing high, what do we do on the A wave, right? So right to the golden zone. All right, so it just makes me laugh because it's always there. It's always there, right? So I don't have to wonder about it. Okay, so swing low, swing high. Slight pause at the 50, right? That's where they kick in. They defend here. Now, pretty good move, but eventually, once again, they do not get to target, and ultimately, that algo gets stopped out, right? They stop on the 65. So with that established, is there a count here that works? Well, it looks like let me show that to you. Okay, so you look here and you go, they got stopped out there. Why? Wonder why. What happened there? Well, let's see if we can figure out why. Because remember, there's always an algorithm on the other side. So we look here and we go, let's get that right on there. Well, sorry, there's why, right? So there's a little slight front run, or they started on the 50 and they got almost to the 618, didn't quite get there. But we can look here. Most likely, I'd be willing to tell you that's a front run on the target. So there's your algo play. Interestingly, they just tagged it over here. So, but this is where they took profit. So this is the swing. You're in this pocket here. This is where they start buying. So there's the kick up, and they get their target, right? Again, doesn't matter what the asset is. I don't care if we're looking at crypto, FX, equities, indexes. It's always the same. Forex, it would be pervasive in Forex, right? No question about it. So now you look here and you go, now that algorithm got stopped out. Well, so it's because, remember, they're on both sides. So look at the first thing we do, right? But it's 2 weeks. So when you see that, then you got to go, okay, well, I got to go back one. So here, it could be, so, we never know what they're doing until it completes. But we can see evidence of it, and we know, as I've been trying to stress lately, that when the first one breaks, you look for this one. Right? It's that ABC pattern that you're always going to get a reaction there. So this one, let me put it in context. So if you were here looking at this swing, all right, so we know this was technical. They got that. Then you'd come here. So, the break here, you go, that's weird. I thought that was supposed to hold. Well, if that breaks, you go back one. Right, now you're right in the pocket. Now they haven't gotten to that target yet. Now, again, just because it's there doesn't mean that they must get there. But there's an algorithm that bought down here that's going to stay long until it gets there or they get stopped out. So with that now established, well, what kind of a count here? Because I've had the second kick. You might have been thinking, there's my 5 down. There's my ABC. Down, doesn't make it. And we're back up and, in fact, take out that high. So a couple of different ways you could count this, but I think that the length of these swings is so long, I think this likely completes the ABC, and you can see the 5 that was in there to get that to complete. Looks like, yeah, it'd have to be a diagonal, well, unless you did it. I don't know that it really matters at this point. I've got a C here. So it's not unreasonable to think we're going into a complex correction. So there would be an X. Here would be an A. So do we have the makings of an ABC going in here? So working from this pivot up here. All right, so 50 wicking through. Is this the B, or are they going to come down one more time? Hard to say. So you know, again, as I will remind you, there's always an algo on the other side. Let's go to a 12-hour. Look at that. Okay, so you look here and you go, wonder. Well, you don't have to wonder. What happened there? All right, so right to the golden zone. All right, boom. So here first, so here we go. So is that going to go down here? We're going to get that. So that would break the swing here. So that would break this algo. Right, this guy would get stopped out if it's going to go to target, but just as we did before, you'd go back one and say maybe that's what they're doing. So now you'd be right in this spot between the 50 and the 618. Now that's a big spot, right? You can't. Well, I suppose if you're in the micros, minis, you could give it that much room, but here on a 12-hour chart, that's more room than you'd want to give on any kind of size there. So you couldn't take this here and, well, shit, maybe you could if your pockets are deep enough here. You put a stop there, or put an entry there and a stop under the 65. So I shouldn't speak for other people. So swing low, swing high, that would be too rich for me. That's a pretty big, that's 145 to, that's a big spread, 142. All right, so if that's the A, I mean, there's a case for that. Yeah, you can see it. So there's potentially an A. So if we're going to come down with this pivot here, that's a good candidate for a B. So if they're going to get to that target, that would put us down here for the B. So potentially now we just have a larger ABC going in. X is in. We're looking for we've got the A. We're looking for the B, and perhaps we go up for the C. All right, so if that were the case, then that might put us could be up here. So now you got to put the whole thing back together and say, well, would that make sense? I don't want to be in log scale. Oh, shit. Maybe I have to go. Can I get it all done? Yeah, yes, I can. Let's go. Might have to go to 3-day. All right. So if this is, so as a completed impulse, right? Not if. Here we have a completed impulse. If that's going to go A, B, C, and we're going to get to this algo target, if that's going to be a very large WXY, which, you know, you're making a guesstimate there. It's hard to say. Certainly would be awfully deep of a retracement here. So would we'd be breaking that? Would you even get the? See if the 887 would hold it. Yeah, 88. Look at that. So there's the 887 right on top of it. So that not out of bounds here. One hell of a move. So first question is this algorithm here, is that going to make it to target, or is the 50 here going to stop it? So you got, so this, if you're looking for a trade here, this is a reasonable spot to be looking right here. Looking for that, either you're going to get the pivot here, or this algo is going to get its target, so they'll get through the 50, but there'll be a little battleground right there. So you've got a reasonable spot. Then you've got some, just looking left here, you've got some structure there that, well, you could kind of include all of this area here. So you've got some structure here. So a reasonable spot for a stop would be underneath that, on the idea that this structure, prior resistance, will hold for the support. So here's your resistance. Is it going to hold here? If that breaks, then I don't want to carry it all the way down that far. I'd rather get out. If it's going to come down here, we're going to go golden zone. Then I'll reevaluate there. In the time being, I'll look right there, because I can manage. I can manage that size there, and that's a reasonable spot to be looking, because I can let the market tell me where I'm wrong, rather than just randomly picking an amount of the size of a trade. So ABC into a WX, got a corrective X wave. Maybe I've got a 3 there. Maybe we're going to get a flat. Hard to say. We don't know. So right now you're kind of just watching and waiting, saying, well, where's the next move? Well, you're in between, so you'd have to defer to the last pivot. So this would be in the context of the larger count. So with this swing established and this golden zone pivot, I'd be deferring to that as the last move that I can identify until I get here. Then I know I've got potentially an algo reaction here at the 50 with that structure. So this little pocket is where I would be waiting. Now, it could be a long wait. You could wait a month or two for that to come down here and get to these levels. So shit, we've got some, which I'm about to show you here. So you're looking at these lines here. That's telling me that we've got events that are coming up that could affect this pair. So you're like, well, what's that all about? Well, all right, so this is kind of the default standard. I've shown this many times before. So if you're looking at getting into a Forex pair, you've got to check and see what kind of high impact reports could be released around the time that you're looking to enter, as that can create volatility, and could stop you out on both sides of it. So you got to pay attention here. So coming this week, and this may be why my members were interested, we got a lot of reports that are high impact reports affecting the Canadian and the euro. But it's not just this week, it's going into next week as well. Now, next week, I have nothing. So all the impact is going to be this week. So when you're first trying to get into a trade like this, it's the volatility around events like that can be problematic, which is why I encourage you to use the larger time frames, daily, or 4 hour and above. So you'll avoid that chop because you get that volatility, something like this kind of reaction. So you see it right here. This kind of swing from low to high, that can be report driven. First impression is, oh, it's selling off, and then they correct it and then bring it back up and then back down. That's what you want to stay out of if you can. Easier said than done in FX, but the safest way to stay out of that chop and that volatility around important financial reports is to pull back to the larger time frame, work off the daily. So if you're in the daily here, you had a very low risk trade there, entering with right in the golden zone, stops on the other side of the 65. You might give it a little more cushion when you're first in, just to avoid the whipsaw, the stop run that's so pervasive in FX as they hunt for stops. So I might give that a little room there. But as soon as it moved away, then I'd tighten right to the other side of the 65. Why carry the risk, especially if you're in a swing trade? So what's next? Well, you can also, you've got 3 pivots here. This looks like there's potentially, that's got modified shift on here. Let's go to original here. So this potentially could be heading in this direction. That would not be crazy. So what would you have here? Here would be a golden corner pocket, right? If it hits. So so you understand the parameters here. As long as this pivot holds, and the idea being that's why we like the golden zone, because you can get in there with relatively low risk, stop on the other side of 65. As long as this pivot holds, well, we damn near have gotten there. Let me get this off here. Let me tighten this up. Let's get absolutely pinpoint, which I would encourage you to do. It looks like we're pretty close. Pinpoint, let's get right on it. Yeah, there we go. Okay, so with that established, now here's where I'm looking for the B. Really right here. So we've damn near tagged the median line. So this 80%, as long as that pivot holds, 80% of making the median line. Boy, that's close, right? But if it's going to come down here, let me zoom in on that. It's not quite there, not quite. So you're still in play. Now it's too late to be a seller, right? That's when you wanted to sell it. So if we're going to come down, so this looks like it's just the retrace. So from that pivot, if we were to come up, so maybe a trade setting up. So if you get this kind of a retrace up here, golden zone again, right? Why would you assume that it wouldn't hold? Right? So here's perfect golden zone. If you get volatility off of the report data, you've got potentially another trade setting up here that would be right in sync with the algo play and the market geometry is the upper parallel here, offering you that resistance. So you have all sorts of good structure here to set you up for a trade. So where's the trade? If you get a reaction tomorrow, it's going to be right here. So that trade, right, looking for that, well, let's see, that one is, this target is here, but you've got the larger target here. So you've got 2 fat zones down here. So you got a pretty fat set of targets here. One algo target, you've got the shorter term algo target, the longer term algo target, the 50 from the swing from the low, and the median line. So yeah, that's tradable. Yeah, so that's one to be looking for. So what's the first thing you do? So knowing that volatility is coming, I'd want to be alerted, and when we hit the 50, But nothing says we must go to the golden zone. I want to know about it when we get to the 50, see if I like it enough. Are we through the volatility of that data coming out? If we're through that and I've got a good pivot to work with, then I'm looking for the retrace, and I can be very disciplined about the stop. So here, there's no reason. Again, I don't know that we're going to get up here. We might pivot at the 50, but that structure is so good, I might take a small piece at the 50 and then look to add a second bite at the golden zone, knowing that I could be just on I'd probably be on the other side of that 23.6 from the other, just to give it a little room around the volatility. So I'm a little bit further away. If it starts to roll over now, if it starts to come down this direction, then I can tighten it up again and get just on the other side of the 65. But nice setup here, assuming we get a deeper retracement here to give you this fat range of targets. So you've got target 1, target 2, target 3, really target 4. You got your second algo target there. So juicy, right? And we know it's very technical, and you know you got volatility coming. So this spread is one to be taking advantage of. Now the other thing to watch for is, are we crossing? So here I'm just looking at the euro compared to the CAD. Euro in orange here, and the CAD in this maroon color here. So they've just crossed around 0. That's where I want to pay attention. So they are going in opposite directions. So here's the last cross at 0. Here they're going perfectly in sync. Then here's the cross. So the crosses, the closer the crosses are to 0, the more I'm interested. So I've just had that. So that would imply euro strengthening, CAD weakening, which fits in with the idea that we want this to go up higher. Then we want to see this reverse. So you can see as they get to extremes, right? When we get to these extremes, there's a reversion to the mean. You can see it over and over again. We get to extremes, reversion to the mean. Extremes, reversion to the mean. Extreme. Now they're moving in they're correlated here. Now they move to extremes again. They are not in correlation. Cross at 0. Just did the same thing. And you want to do that for every pair. All right, I just went through a whole training on this on our FX series. So if you're interested in that, I think we have it set so you have to enter our membership giveaway, and then we email these to you as part of that entry, right? There's no cost to it. There's no, you enter for free. So since we're doing FX here, I'll post that link underneath the video here. But that's one to be watching for. So what we're seeing here fits with what we're seeing here, fits with the release of market moving reports. So all setting up nicely to be paying attention here to this pair. All right, guys. Okay, with that, we'll call it a day. All right, see you later. That link, if you're interested to get the training videos we did, will be underneath the video. All right, guys. Talk to you later.